Cryptocurrency is everywhere, on the news, all over social media, and in conversations at work or with friends. It seems like every day there's a new headline about Bitcoin, Ethereum, or some other digital coin-making waves. Maybe you've seen stories about people making fortunes overnight. Or perhaps, you've heard warnings about scams and wild price swings. It's hard to ignore the buzz, and you might be wondering if you should pay attention, or if it's all just hype. Even your cousin's friend claims to have struck it rich, and suddenly, everyone seems to have an opinion about crypto. Some say it's the future of money, while others warn it's a bubble waiting to burst. The truth? It's complicated, and it's easy to feel left out or overwhelmed. The world has changed a lot in recent years. The wild hype has cooled off, and now, more people see crypto as a legitimate asset class and a powerful technology, not just a get-rich-quick scheme. It's being taken seriously by investors, companies, and even governments. Regular people are getting involved, and the tools for buying, selling, and storing crypto are easier to use than ever before. You don't need a background in finance or computer science to participate. This guide is for the curious but cautious, those who want to understand both the risks and the rewards before jumping in. We'll talk about how to spot red flags, avoid common mistakes, and make decisions that fit your goals and comfort level. Blockchain, the technology behind crypto, is more than just a buzzword. It has the potential to transform industries from finance to supply chains, healthcare, and beyond. Understanding how it works can help you see why so many people are excited about its possibilities. We'll focus on a sensible approach for beginners, no wild speculation or risky bets. Instead, you'll learn how to build a foundation, set realistic expectations, and grow your knowledge step by step. We'll cover the basics, practical steps to get started, how to keep your investments secure, and strategies for steady, long-term growth. You'll learn how to protect yourself from scams and keep your digital assets safe. By the end, you'll have a clear plan, a better understanding of the crypto landscape, and the confidence to take your first steps, whether you decide to invest or simply want to stay informed. Let's get started. Cryptocurrency is digital money, but it's not just a new way to pay for things online. It's a revolutionary technology that's changing how we think about money, ownership, and trust in the digital age. Instead of being printed or minted by a central authority, cryptocurrencies exist only in digital form, secured by advanced cryptography. Unlike traditional dollars or euros, cryptocurrency is decentralized. No single bank, government, or company controls it. This means you don't need to rely on a middleman to send or receive money, and transactions can happen directly between people, anywhere in the world. Transactions are verified by a global network of computers using blockchain technology. Think of blockchain as a public ledger that records every transaction, making it transparent and nearly impossible to alter or fake. This system builds trust without needing a central authority. Because of this, cryptocurrency enables faster, cheaper transactions compared to traditional banks, especially for international payments. It also offers protection from inflation or government interference, since many cryptocurrencies have a fixed supply or transparent rules. Bitcoin was the first cryptocurrency, and it's often called digital gold because it has a fixed supply of 21 million coins. Just like gold, it's seen as a store of value, but it exists entirely online. Ethereum is different. It's not just digital money. It's a platform for building decentralized applications, or dApps, that run on its blockchain. This powers things like NFTs, decentralized finance, DeFi, and even games, opening up new possibilities for how we use the internet. Not all cryptocurrencies are designed to be money. Some are utility tokens, giving you access to a service or platform, while others are governance tokens, letting you vote on decisions for a project's future. The crypto ecosystem is vast and constantly evolving, with thousands of coins and tokens, each with its own unique purpose, technology, and community behind it. People invest in crypto hoping these technologies will become widely adopted, transforming industries from finance to art, and even how we organize communities online. But it's important to remember, cryptocurrency is high risk and high reward. Prices can swing wildly, and not every project will succeed. That's why understanding what you're buying is crucial. Don't just look at the price or hype. Dig deeper into the value, technology, and real-world utility behind each project. Read white papers, check the team, and understand the problem they're solving. crypto is about more than speculation. It's about innovation, new business models, and empowering people to control their own assets and data. So before you invest, know the difference between coins, tokens, and platforms. That's the foundation for making smart decisions in the world of cryptocurrency. Ready to buy crypto? Before you dive in, it's important to understand the basics of how to safely purchase and store your digital assets. The world of crypto can seem overwhelming at first, but with the right tools and a little know-how, you'll be set up for success. You'll need two things to get started: an exchange and a wallet. Think of the exchange as your gateway to the crypto universe, and the wallet as your personal vault. An exchange is where you buy, sell, and trade crypto. Think Coinbase, Kraken, or Gemini. These platforms let you convert your regular money into digital coins, and vice versa, all from your phone or computer. When choosing an exchange, look for strong security features like two-factor authentication, transparent and reasonable fees, and a simple selection of major coins such as Bitcoin and Ethereum. A user-friendly interface can make a big difference, especially if you're new to crypto. Once you buy crypto, you can leave it on the exchange, but for better security, move it to your own wallet. This step is crucial for protecting your investment from hacks or exchange failures. Remember the saying, not your keys, not your coins. If the exchange is hacked or goes offline, your funds could be at risk. Taking control of your crypto means taking control of your private keys. Hot wallets are software wallets connected to the internet. They're convenient for quick access and everyday transactions, but they're also more vulnerable to online threats. Cold wallets, on the other hand, are physical devices that store your crypto offline. They're highly secure and ideal for holding larger amounts or long-term investments. Start with a reputable exchange to make your first purchase, then consider upgrading to a hardware wallet as your investment grows. This way, you balance convenience and security as your needs evolve. Protect your assets by controlling your own keys. Write down your recovery phrase and store it somewhere safe. Never share it online. Security is your responsibility, and skipping this step could cost you everything. The right setup keeps your crypto safe from hackers, scams, and even your own mistakes. Take the time to get it right. Don't rush. Take time to learn how wallets work, how to back up your keys, and how to recover your funds if needed. It's worth the effort for peace of mind. Now you're ready to buy. With the right knowledge and tools, you can confidently start your crypto journey and keep your assets secure. With thousands of coins, where do you start? Keep it simple. Ignore hype and risky coins that spike overnight. They're more like gambling than investing. Focus on Bitcoin and Ethereum, the blue chips of crypto. Bitcoin is the oldest, most secure, and acts as digital gold. Ethereum powers decentralized apps and innovation. Many investors hold both for diversification. If you're tempted by other coins, limit it to a small portion. 90% of your first investment should be BTC and ETH. Build a solid foundation before exploring riskier projects. Don't chase trends. Learn with the leaders first. This approach saves you stress and money. In crypto, do your own research is essential. Never invest based on hype or tips from friends or celebrities. Start with the project's website and white paper. Look for clear goals and real-world use cases. Check the team. Are they public and experienced? Study tokenomics, supply, distribution, and whether founders hold too much. Use sites like CoinMarketCap for data. Join communities on X, Discord, or Reddit, but stay skeptical. Look for active development. No updates means a dead project. Research takes time, but it's the only way to invest confidently. Don't skip this step. Security is everything in crypto. You are your own bank. Use strong, unique passwords and always enable two-factor authentication. Beware of phishing scams. Never click links in unsolicited messages. Always access exchanges by typing the URL yourself. Your wallet's seed phrase is your master key. Write it down and store it securely offline. Never store your seed phrase digitally or share it with anyone. No legitimate company will ever ask for your seed phrase. If you lose it, or someone steals it, your crypto is gone forever. Consider storing your seed phrase in 2 secure locations. Take security seriously from day one. One mistake can cost you everything. Protect your investment like it's cash. Stay vigilant, your future self will thank you. Don't obsess over prices. Use dollar cost averaging, DCA. Invest a fixed amount at regular intervals, no matter the price. DCA removes emotion and averages your purchase price over time. Set up automatic recurring buys on your exchange. Think long-term crypto is volatile, but patience pays off. Don't panic during market drops. See them as opportunities if you believe in your investments. Rebalance your portfolio as it grows to manage risk. For example, if one coin outperforms, sell some to restore your target allocation. This disciplined approach helps you avoid emotional mistakes. Build your position steadily. That's how you grow wealth in crypto. Don't go all in. Only invest what you can afford to lose. Make sure your finances are in order before buying crypto. Avoid emotional trading. FOMO and panic selling lead to losses. Stick to your plan and DCA strategy. Don't chase meme coins or get-rich-quick schemes. They're pure speculation. Focus on projects with real utility and strong fundamentals. Never neglect security. Use strong passwords, 2FA, and protect your seed phrase. One careless mistake can wipe out your investment. Learn best security practices from the start. Don't become a cautionary tale. Stay disciplined, avoid hype, and protect your assets. That's how you avoid disaster. Your future self will thank you. Let's recap your action plan. Open an account on a reputable exchange and secure it with a strong password and 2FA. Connect your bank account and start with a small, affordable investment. Split it between Bitcoin and Ethereum. Set up recurring buys to dollar cost average. As you gain confidence, consider moving your crypto to a hardware wallet. Keep learning, follow reputable sources, and always DYOR. Ignore hype and stick to your long-term plan. The crypto world is